Welcome to Explain the Charts, where we break down the intricacies of the markets with a blend of news and technical analysis. Today, we're taking a look at the NZDUSD pair, diving into recent developments and economic data to get a grasp on how they might be influencing the chart. From our Google search, we see that the New Zealand dollar is expected to rise next year due to interest rate cuts by the Reserve Bank of New Zealand. On the other hand, the US dollar has been gaining strength for the past 2 days after stronger-than-expected GDP data. This divergence in monetary policy, with New Zealand easing and the US staying hawkish, suggests a potential for further strengthening of the US dollar against the NZD. Now, let's shift our focus to the daily chart, zooming out to get a broad perspective on NZDUSD's recent performance. We see that the pair has been consolidating in a range between 0.60 and 0.62 for the past few months, with no clear trend dominating the market. Within this range, we can identify some key support and resistance levels. The 0.60 level has been acting as a strong support zone, holding the pair from further declines. On the upside, the 0.62 level has acted as a resistance zone, capping the pair's rallies. Breaking out of this range could offer significant trading opportunities, so it's crucial to watch the price action near these levels. If we zoom in on the 1-hour chart, we can see a more detailed picture of the price action. The consolidation pattern in the daily chart is evident here as well, with the price fluctuating between 0.61 and 0.62. We observe a series of higher highs and higher lows, suggesting a potential bullish bias in the short term. However, this upward momentum has been stalling recently, with the price struggling to break above the 0.62 level. This hesitancy could be attributed to the recent strengthening of the US dollar, as discussed earlier. Traders might be holding back until they see a stronger indication of a sustained bullish trend in the NZD. The 15-minute chart provides the most granular view of the NZDUSD. Here, we can see short-term fluctuations and impulsive moves, making it ideal for scalping strategies. However, the fast-paced nature of this time frame can also be volatile, making it less suitable for long-term trading. Looking specifically at the recent price action on the 15-minute chart, we see that the price has been consolidating between 0.624 and 0.626. This range has held for the past few hours, with no clear breakout in either direction. This consolidation pattern, coupled with the recent struggle to break above the 0.62 resistance level on the 1-hour chart, suggests a lack of strong momentum in either direction. We might see a continuation of this range-bound trading in the short term until a decisive breakout occurs. To sum up the key levels we've identified, the 0.60 level remains a crucial support zone on the daily chart, while the 0.62 level serves as a resistance zone. On the 1-hour chart, the 0.61 and 0.62 levels have been defining the short-term range, with a potential bullish bias. The 15-minute chart shows a tight consolidation between 0.624 and 0.626. A breakout above 0.626 on the 15-minute chart, followed by a sustained move above 0.62 on the 1-hour chart, would be a strong bullish signal. Conversely, a breakdown below 0.624 on the 15-minute chart and a subsequent move below 0.61 on the 1-hour chart would signal a potential bearish reversal. It's important to consider the fundamental factors, like the divergence in monetary policy between New Zealand and the US, as well as any upcoming economic data releases, when making trading decisions. Remember, trading involves inherent risks, so always manage your risk carefully and use stop-loss orders to mitigate potential losses. Thank you for joining us on Explain the Charts, and stay tuned for more in-depth analyses of the financial markets.